Yeah, good morning, good afternoon, good evening from wherever you are watching me from. This is Sam Wealthy over here. Looking at our previous lectures, we actually learned about the meaning of Forex, how we got the name Forex, then the Forex pairs, looking at the base and the quote currency or the base or quote pair. We look at leverage, margin, lot size, and a couple of other things. Here in this lecture 2 or day 2, we are going to, let me just project it. We are going to talk or learn how to understand the charts. We will learn about the line charts, the bar charts, the candlesticks. Then we will learn about the daily, weekly, 4-hour, 1 hour, and a couple of more. Then we find to know who a scalper is, who a day trader, and who a swing trader is. So basically, before you can trade Forex, you have to understand the charts. Every Forex trader you see is having a lot of screens with charts up and down. But for you to understand, it's very simple. And once you're able to understand the chart, that will help you to predict or know if the next candle or next couple of candles are going to form going upwards or downwards. So I'll switch to my chart screen, then we will take it from there. Let's take it from here. Yeah. So as we can see here, this is just a blank chart. So I'll first pick this one. This line and then a couple of boxes. So I'm drawing, or they mostly use type of lines or graph or whatever to present the Forex prices for a very long period of time, which is mostly acceptable is the Japanese candlestick. Actually, we have the line chart. The line chart looks like something like this. So in case the price closes around this area, there will be a halt or a bend in it. Then if the price goes up, it goes up, it will just be like this. So once you take your cursor, you'll be able to know where the price halt or where price ended at every point in time, irrespective of the time frame. But the one I have here currently, these two lines or these two drawings, is how the Japanese candlesticks looks like. The Japanese candlestick is either it will show you moving upwards or downwards. We will talk about that later in the course. So with this one over here, if a candle is going up, let me just select the text. So over here, this will be the opening. We call these lines above the candle bodies, we call it a wick. We call the lines above the candle bodies, we call it a wick. Then we call the box wherever the price, we call that one body. We call this one wick. So this is a wick, this is a wick, then this is a body. So if the candle is a bullish candle, we have bullish and bearish candle. So if it's around this area, sorry. Yeah, so if it's around this area, this will be if it's a bullish candle. Oh, sorry, a bearish candle. Let's take the bearish candle, then we later move on to the bullish candle. So if it's around this area, this will be the opening and this will be the close. So before a candlestick will be able to form, it just open. the candlestick will just open like this, irrespective of the time frame. It will open like this, then it will keep on moving as the market price do not stop in the 24/5 market. It keeps on moving like this. It goes up, it comes down. But once it opens at the top level and closes at a low level, we call it a bearish candle. So if you see a wick in a bearish candle like this, it means price open from here and close from here. But before the price closed from here, once the price opened, it came up a little bit. But since it didn't close and it rejected, it came down, then it came up a little bit because before it closed. So the wicks above or the lines above or below shows where price went in that time frame, but price didn't stop. So if the candle opens above and close below, we call it a bearish candle. And the opposite, if the price open below, this will be the opening, and if it close above, that will be a bullish candlesticks. And the wicks, as I said earlier, shows where the price went within that time frame, but it didn't hold. So wherever the time frame, if it's like a 1 minute time frame, this whole candle took 1 minute to form. So it will just be moving up and down. So it may be exactly 1 minute from the candle opening. If it just ends here, it will just close, a new candle will open. So it's just multiple of what you are currently seeing on the screen, then it keeps on piling. So I'll just show you how it looks, just like how you are seeing. So for me, I've made all my bullish candle blue and the bearish candle red. So like with this candle, for instance, you are seeing, you can see it's a bullish candle and it is having some small wick, as I said earlier, over here, very small and very small. Then the body is very big, wick, small wick, big body. Actually, this is a 4 time frame of the USD card. So meaning this is a bullish candle, this means price opened from here, came down a little bit, went all the way up, came here before the 4 hours was up. And you can see once the 4 hours was up, it just closes here, then a new candle opened right over here. The new candle also came down a little bit, went all the way up. Once it got here, that new candle also closes. And this one opened up. So you can see once this one opened up and closes down, it's a bearish candle. That's why it is red in color. Then this one opened here and closes above. So if the candlestick opens below and closes above, then that one is a bullish. And if it opens above and closes below, that is a bearish. So that's the candlestick. So we have a couple of this. And before you can read the chart, we have something called time frame. So with time frame, we have it starts from like mostly people or most people use the 1 minute time frame, 3 minutes, 5 minutes, 15 minutes, 30 minutes, 45 minutes, upwards to the 1 hour, 2 hours, 4 hours, a daily, weekly, and a monthly time frame. So if you take a monthly time frame or the 1 month time frame, every candle you are currently seeing on the screen took 1 month to form. And for you to know the month or the time that candle was formed, you just have to put the cursor on the candle, and below here, where my cursor is, you will see the date. Like this candle, for instance, let me just select. Like this candle, for instance, was opened on the 1st of June, 2021 or 2021. And every candle, like this one, for this blue big candle, was opening on September 1st, 2022. So every candle will take 1 month to form. So we will move on to the weekly time frame. So every candlestick we see over here takes 1 week to form. And before we will get 1 month, 1 month candlesticks, it will take 4 weeks or 4 candlesticks of the weekly time frame to give us 1 month candlestick. So it keeps on breaking down to the lower time frame. So if you take a daily time frame, just as every candle you see here is just a daily time frame. So I just want you to notice something over here. If you see this big circle, this big square that I've drawn or rectangle I've drawn around this price, this is a daily time frame. But once I go to the weekly time frame, you can see it has been compressed. So a lower time frame just expand the higher time frame. As this is a weekly time frame, where the square or the rectangle is a weekly time frame. But once I go down to the daily time frame, you can see it has been expanded. Once I go lower to a 4 hour time frame, It's just the same chart, but you can see how expanded it has been. And once you go to the 2 hours time frame, it will keep on expanding, expanding, and expanding. And once you go up, it will keep on contracting, contracting, contracting. So that's the time frame. So as I said earlier, we have something called scalper, we have something called day trader and swing trader. They are the most type of traders we mainly have, sorry. So if you say a scalper is someone who mostly focus on the 1 minute, 3 minute, 5 minute, and sometimes the 15 minutes time frame. They focus on that chart to either sell or buy. And for a scalper, they just enter a position, couple of minutes, they are done, they'll just close the position and take their profits or loss. As in the day trader mostly opens a trade which will last for hours and probably maybe to the next day. Then we talk of the swing trader. Swing trader is someone who opens a trade and it will last for a couple of days, weeks, or even sometimes months. And before you be able to do this, it mostly depends on the time frame you base on or you look at during your analysis. So that will be for it for day 2. Actually, we have other ways we are able to use in order to see the market. So like we have the line chart. You can use the line chart, as you can see right now, is looking on the screen. We have something called Heikinashi. We have the Heikinashi. That one people also use to make the analysis. But the Japanese candlestick is what is mostly being used by Forex traders. That's why I explained that one into details. So this is how Japanese candle looks like. So I'm sure by now, you know how to understand every chart, the time frame, a couple of ways to analyze charts or how to understand the Forex charts you see on the screen, either it being Heikinashi, line charts, and once you just open your trading view, click on this link, you'll be able to find a whole lot of others that you'll be able to use to understand the price or previous price, which has happened in the past. But I told you the mostly ones we use is the candlestick or Japanese candlestick. We have the hollow candlestick, the line with market step line area, HLC area, baseline, columns, high and low, and a couple of more. So I'm sure now you're able to understand the charts, know a couple of types we can use. Then you know Heikinashi, you know the daily, weekly, and how they are being formed. You know who a scalper is, who a day trader is, and who a swing trader is also is. So we will end here and probably come back later with the day 3 or session 3 of our training. Thank you, Sam Hilfiger here, or Samuel Dia, some people call me in the Forex era or Forex area. Thank you very much. See you. Bye.